Good evening, peoples. So I wanted to do a follow-up to some of the work that I've been doing on the YIELDMAX funds in terms of trying to show the investment, the opportunity within the investment, how to have safety, how to hedge, the arguments from growth versus yield, just a lot of topics. So the first 5 minutes, 8 minutes, I'm going to review what I showed you. Then I'm going to update it with a broader approach and show you some tools that you can utilize to help you select the funds. So first off, a lot of people don't really believe these kind of yields. Or they say, sure, that was 1 month, but what about NAV reduction? So again, I'm going to go through it just kind of quickly in the opening. Then I'll slow down when I get to the new things. So I showed this in one of my previous videos, and I go through 3 different scenarios with 3 different YIELDMAX funds, and each of the funds are actually the first 3 are single stocks, and the last one is the fund of funds, which is all of the single stock funds. So gonna move through these quickly. I'll slow down in the latter part and you'll see what I was doing. So in these, I started with msti. msti is only a 3-month fund so far in the YIELDMAX family. It's based on MicroStrategy, and MicroStrategy has some business software sort of re-engineering itself into business software around Bitcoin, but holds a tremendous amount of Bitcoin. So if you're a Bitcoin fan, of course you know Michael Saylor, of course you know MicroStrategy. So this is legitimate, and I'd be the last to tell you you can expect this to be sustained. Maybe it's going to double from here, maybe it's going to get cut in half. It's all going to sort of track Bitcoin. And I'll give you 2 schools of thoughts just on MSTR, the underlying. I read today about Bernstein, an analyst, updated his forecast for a doubling of MicroStrategy to 28.90, okay, from some 14 something currently. And that may well happen, right? But I also was watching an Elliott Wave guy today. Again, one view, but somebody that I look at his Elliott Wave for gold, I look at it for oil, I look at it for BTC, and he shows near term, month or 2, that it could go down to 44, which is a 50% retracement, could go as low as 37 on a 61.8. I'll be honest with you, I'm very bullish near term and longer term on MicroStrategy. But I'd be the last one to tell you that it's not possible for it to go to those levels, right? It has to do one thing at a time. It has to break 65K, close below that for a couple of days, continue its retracement, go to at least 52, because once it consistently stays below 60, it's probably 52 in the cards, and then it would have to go to 44, which is a long way to go, but would represent a 50% retracement. And so that would be horrible if you set in msti during that period of time to a 44. Misti's probably going to go to 19 or something. So you're going to have a big NAV reduction. Are you still going to get paid a monthly? Absolutely. Is it going to be lower than the $2 and $3 payments? Yeah, very likely. So there's hedging. I go into a lot of those things in my YouTube channel. But I gave you an argument for somebody who's saying it's going to the moon to 28, and it probably will. Even that Elliott Wave guy that shows the 44 and 37 shows within a month or 2 after that, he's showing a trajectory in December of 2024 to January of 2025, and the up wave of 120. So all I'm saying is things move, and Tesla is a perfect example of that. The more I listen to Elon Musk, the more I listen to his Optimus robot program and some of the other things, I think we're not far from a turning on Tesla, and Tesla could absolutely launch back up into multiple times its value. But I want to see that movement. I want to see some of those breakouts. So I'm not here to tell you where something, I wouldn't need to even do a YouTube channel. I'd just be doing options all day if I knew both short-term and longer-term trends exactly, right? I can tell you when I'm bullish longer-term in an asset class, and very much so on BTC, very much so on the precious metals miners, the GDX. But can I tell you when those are going to get out of the doldrums? No. And they're the most hated asset in the world right now. They're so cheap compared to the metal prices. But I won't degrade there. Just those are all offerings that YIELDMAX has. So let's just remind you what these generated. So it's $16,000 a month if you did nothing but have 100 grand invested 3 months ago and collected Misty's payments. Now somebody would probably say, oh yeah, but where's their stock price? Well, it depends on which day you ask. I think when I did this one, when it's 31.8, it's currently 29.46, right? So that doesn't change your payments. And if you bought it at inception, you paid $20. So, that NAV theory doesn't hold water. Now, it might if you go to 48, 43, you go to some number on BTC, but it would be a temporary drawdown, and it may not even go below 20. And then you're even in all the what is that, $9.65 that you've already collected on something you paid $20, and all it's doing is returning to $20. Sure, if you paid $30, you're annoyed it goes to $20. But do you sell your house that you're renting out because the market value drops 30%? Not likely. If you've owned it for a while, it's just a rental property. Well, this is an income property. But you don't want to ride something that's in a 3-year downturn and it's just in a horrible bear market. Nobody, that sector is so out of favor. So you have to make those decisions. All right, so on the 10K, I showed an example of Cony. Very much BTC oriented as well. Although it's an exchange, right, for all cryptos, it's kind of like the general store in a gold rush that sells picks and shovels, right? Mining equipment, lamps, your forehead. It doesn't mine itself. So in this case, they're not a miner, right? They're not business software. They're an exchange where people, so obviously they're tied to the success of the cryptos and BTC, which is the king of the cryptos, in which it's really the only one that I'm just right now absolutely bullish for multi-year. Doesn't mean it's not going to have a 61.8% retracement. And that's why I talk about hedging when I own these things. So this one's got an 11,000, return on your investment, which is 135,000 annually. This is a month, peoples. So again, and then I always talk about total return, which again, I'm not going into all of this because I've already have a video on this. But my point is, total return says what yield am I getting and what does that constitute annually. If I get $3 in the first month on a $20 stock, I can say, okay, I'm getting return for the year $36 on a 20 stock. That's easy to calculate an annualized return. And then I can say, well, what's the NAV value? Is that $20 still $20? Well, if that $20 is $16, I lost $4, but I gained $36, right? Because I got paid every month. So you add those two together. It's always about total return. It's less important when I've got a 3% annualized return. We're talking about annualized returns of 80, 90, 100%. I think the lowest is 20-something% in these ETF funds, all because of their option strategies. All right, so we're going to move faster. This one I think was NVIDIA, right, which is really blowing up lately even more. And it was returning $8,634 on a $100,000 investment. And the last one, I did a video where I said, hey, you want to be much safer? You know, I wouldn't recommend if all you had was 100 grand and you go stick it in MSTI. You're chasing yield. You're looking in the rearview mirror and expecting to see that in front of the car in the next 10 minutes. It may or may not happen, right? As I said, can I predict? Absolutely. But I think if you hold MSTI long term, you're going to be fine. But might you want to hedge it? If you're buying it at 30 or 35, thinking that NAV could go to 20 if we get a big retracement in BTC before it goes to the moon. So, you know, you have to think about safety. But look at this. And the indexes could all go down 20%, right? But if you're holding YIELDMAX, you're holding all of the underlying funds, these little shaky companies nobody's ever heard of, right? Apple, NVIDIA, Facebook, Google, Coinbase, AMD, Disney, Microsoft, JP Morgan, Moderna, PayPal, Netflix, ExxonMobil, you know, treasuries. Not, you know, it's a small component. So the people that say get out of those YIELDMAX risky funds, you know, buy a real stock. Okay, well, what is a real stock, right? The Magnificent Seven, which are in this thing, they represent, guys, 34.9% of the S&P 500 in the seven Magnificent Seven stocks. So anybody that tells you this isn't safe, no security is safe. It's like I said, if the Dow and the NASDAQ go down 25%, you know, the underlying fund is going to go about 22%. Those that say you have 100% of the downside and 15% of the upside, I'm going to tell you right now, they're liars. They giving you half truths. These funds are somewhat protected, 3, 4, 5%, because as you're going down, you're collecting the sold naked call. They call it a covered call on top of the synthetic. So you have, don't give it a cushion. If something goes down 100% and you go down 93, it's still a crash. But they always say, the people that are haters of these, you got 100% of the downside and 15% of the upside. That is not true. On a given week, if that stock doubles, you may be limited by 10 or 15% on your naked calls that you wrote. However, that's 1 week. So if the stock simply goes up 5% of a week for the next 52 weeks, you're gonna do the upside at 95% of the underlying. Now, if the underlying goes up 30% in a week, yeah, you're not gonna participate. So in your portfolio, these stocks, these high yield stocks, can be a portion. If you think that, you know, Tesla is going to be up $100 in the next 2 weeks, you can own a little Tesla. It's not a problem. You're going to get income from it, and you're still going to go up. You're just not going to match the underlying. It may outperform you 2 to 1. But you're still going to go up, and you still got income. You didn't get any income from the underlying stock, the growth. You may wait a year to take your profits, and the stock could turn down before you have a chance. So again, these assets can be extremely rewarding. You just understand what you own. And the last thing to do is pick one for high yield that you know nothing about the underlying, and if you did, you were bearish. All right, let's get into the thing I wanted to add. So here's my value add for here. So you've seen this one in one of my videos as well. And I'm going to show you and move in to the one that really matters. There's two. So I redid this one slightly and I said, okay, what's the YIELDMAX monthly income based on yield, right? rank the ETFs by yield, and how about we also do NAV reduction? So I just did a scenario here where I ranked them first and foremost by yield. And then I just show NAV, but I can search on any of these tabs. So, and how's it all calculated? So I'm showing right now, again, what I did, I think I just took it on the last payment. In the next sheet I'm going to show you, I'm analyzing all these funds 3 and 4 different ways. I'm going out and saying, what is their yield based on the last 30-day, the last payment in June. Okay, what did the fund pay in June? Take that, take today that I'm showing you this video, which is the weekend, okay? Well, it could be Monday morning, but it's still, the markets haven't opened. Most places it's still the 16th. So my point is, I took Friday's closing price, and then I calculated the yield by simply, and so that hurts the fund of funds, YMAG, YMAX, and Ulti, because their price shows lower because they've just been hit with the reduction, right? They haven't really had a chance to recover the price. So in some cases, their stock price is going to look cheap, like an Ulti, and it's going to make the yield look even higher because they just subtracted the last payment out. Whereas the stock price will probably recover and then the yield will drop. So sometimes if I do it on the single stock funds right after ex-dividend date, the same thing. So I'm just pointing that out to you. So I've got the NAV, kind of interesting stuff, right? We go over and we say, okay, who's the top yielder? Well, the top yielder is MSTI. So it almost doesn't matter because MSTI's a 3-month number. So look at this, their average, okay, so they paid $3.03. Their average over the last 3 months is $3.22. Their median, I also calculate that, right, is different than average for those of you that don't know math to that level. It can be the same, you know, but it also can be different. So the yield is 123%. Look at their NAV. So those that argue the high yielders, you've gotten killed. No, it's not always the high yielders, right? Here's a minus 46. ARK Innovation, love Cathie Wood. She's a visionary, but she may not have it right in the near term, right? She's been a visionary in Tesla for a long time. Well, when it 20x, that's great. When for the last year and a half, it's been in a downturn, right? You call it a bull flag, but nonetheless, it's going down. That NAV reduction is real if you own ARK, right? The yield's not going to make up for it. Well, actually, yeah, it doesn't. So there's a little bit of difference there. So the NAV is minus 46. And the yield's running. But you know why that yield is showing high now? It's working off the 1068 price. That guy that bought it at 20, he's still got 1068 of value, but he's not actually getting that yield. He's still getting yield on a $20 investment. So that's why I show some of this stuff. So let's jump over here. This one is really where I wanted to go, and it's probably going to correspond to the title a little bit better. All right, so what I did, I took the funds on launch date and I had 8 or look at all these little, so I had a whole bunch of other data and I just squeezed those down into my spreadsheet table. They're not relevant for what I'm presenting. I can go back and expand those. So I didn't want to make an all new sheet. So I went in and said, okay, what's the average price? So my average is every payment that company has made. Well, when it's somebody like MSTI, it's April, May, and June. So their average is going to be their 3-month average because that's exactly what they have, 3 payments. So on some of these brand new ones that have only paid once, I went in and put the same value in the previous month so that my 3-month average would be the same as my 1-month average. Otherwise, it's going to try and divide by 3 on one price. So, and then I put an investment number. So this is what I was getting to. So I want to show you guys, if you invest a certain amount of money, what you're going to get back in shares and dividend income based on the current price. And then we can play around and say, okay, I put 10 grand in MSTI, and it's going to throw 10 grand in every one, and say, okay, based on the 3 month, based on the median, or based on the average, which are all about the same, right? The average for MSTI is $3.22. The median is $3.03, and the last payment in June is $3.03. So you can go out and factor that, right? But knowing that NAV reduction on the other sheet, and I'll end up putting that on here, but it would have gone outside my screen, and I was trying to keep this, you know, to where you guys could see everything without having to scroll and do that. That's so annoying sometimes, right? So now I've got the data in here. Let me squeeze one of these invest dollars. I think that, oops, no, that hurt my number. Okay, so the purpose of this is to show you guys all of this. And you know what? Personally, I think you should vary. I've had months where I only own MSTI and Cony, and I showed that, and YBIT. I do own some GDXY. I do own some YIELDMAX. But I mean, I haven't diversified to the level I want to. When I start seeing what could happen to BTC, I know where it's going, but if I told you it's never going to break 55, I could be proven wrong in a week or two. Nobody really knows that. The probabilities increase if it breaks 60. If it breaks 60, it's possible for it to go to 52. Obviously, it has to break 52 where there's major support to get to a 44-50% retracement in this whole upcycle. So, you know, and it only increases the probabilities. It doesn't mean it's going to. Do I think it's going to 120? Absolutely. But could it visit 50 or below? Yes. So you just have to be careful, but there's nothing wrong with owning these and then hedging these. And I go through all of that in my individual videos, and I'll be adding that on my recommendations. Sometimes the hedging just involves buying a bearish ETF. ProShares has a 2 times BTS bearish. It has a 1 times bearish. I think there's an MSTR 2 times bearish ETF, right? That would certainly take care of it if you were concerned about MSTY crashing because BTC is going down and hence MSTR is going down. So, you know, a little insurance is good. And for those that are capable and have options approval in your account, obviously you can go out and buy some puts. Right? You're not buying them on MSTI. You're going to have to buy them on MSTR, and they're really expensive. So you're better off buying puts on, you know, something else. You're better off buying the ETF, but you don't always have that ETF to hedge, right? But they're just more and more ETFs. And look at YIELDMAX went that way with crash on Tesla, right? They got Tesla, and then they got crash. And I think they're coming out with chips, which is a bearish CHPS on, don't know the launch date, on NVIDIA or NVIDIA to protect it. And then you've got an ROTN coming for Apple, right? Or Apply. So hedging, and you may only do a percentage and say, hey, right now I'm going to do 80% and I'm 80% into MSTY, but I'm going to take 30% of funds and go put them in a bear fund to somewhat protect the downside, right? Because you can stay in an income fund, just don't write it down 50% in the NAV. I don't think that's a good way to do it. So you could, if you're making money in the bear ETF, right, the hedge, if you're over there making capital in that, then stay in the fund and collect your income and offset the NAV loss. So there's a lot of strategies here, folks, and I'm not going to continue on that. But let's go through this. Okay, so I got 100 grand in here. So NVIDIA pops up. Look at this. What it pops up, number 3. Normally, Cony would be your number 3, and usually Cony's ahead of NVIDIA. But NVIDIA's been really moving lately. But again, which one of these do I pick? I can make NVIDIA be halfway down this list instead of being near the top. Well, how is that? Well, what if I go out and say the average of all their payments? Okay, let's follow them. Look at NVIDIA. So if you take their 3-month average, you're going to get on 100 grand, you're going to get $6,956 out of NVIDIA. If you take their average, okay, across all the months, which probably only 9, 10, I mean, I can scroll over, but it's not that important at the moment. But if you take just their last, when they've been trending up, that's 8,391. Which do I believe? Well, I believe them all. How do I know which one I'm going to get? Good luck with that, right? Again, if I was that much of a soothsayer, then, you know, I'd just be trading all day long, every minute, and using options, and probably have billions at this point, right? We use probabilities. I do. I use probabilities, chart analysis. Been doing it for 35 years. And I know options in and out. So for me, I love what YIELDMAX does with these options. This stuff's only been available to institution investors before. So what you've got here, again, is a fabulous product. So don't listen to the haters that tell you growth's the only way to go. Would I say it's okay to have a growth underlying? Absolutely. I mean, if you think it's going to 2,800 from MSTR, and you want to buy some MSTR, why not? You might go 50-50, own some MSTI, get some yield, and own some MSTR for just, you know, because MSTI is not going to perform as well. But those guys that tell you you're capped at 15% on the upside, that's each week. That's not all together. And so and they're 100% on the downside. No, they forgot about the income. Ask the Tesla people. You know, they were still collecting income when their NAV was eroding and getting a reverse split, and it wasn't enough to offset the NAV loss, but they still collected monthly income. It's still total return, not just one or the other. On a growth stock, what do you have? All you have is one return. Right? I bought a stock at $10. It's at 14. How much have I made? I've made 40%. Really? So if tomorrow it went down to $1, have you still made 40%? Do you have a stop loss in? Right? You haven't made anything. You have paper value that you're up 40%, but you haven't collected it. You haven't sold it, right? So, and at least on these, we get the money. Sure, they lower the NAV by that price. Anybody that tells you they don't are crazy, right? It's always shown in the pre-market overnight value, the drop. But again, then the market takes over and the market dynamics, right? The bid and ask starts evolving. I've seen that made up in a single day where it was higher than the payout loss. Right? But I've seen it go the other way. I've seen the payout loss deducted and it traded down that day another % or so. So, you know, and somebody looks on the chart and says, oh man, a guy keeps on my channel is coming on and saying, man, YBIT, it just sucks, you know, compared to BITO. No, not really. They're pretty close day to day. But when we have a payout and we drop down and it's 7% difference in BITO, it's because we got our dividends subtracted, right? But BITO pays a dividend, and when they had theirs subtracted, we looked really good. So you just really have to understand these dynamics of what's going on. So let's take a look. What else can I do for you guys? All right, so I have 100. I built this so that I can type any number in, right? I can say, okay, because before I just showed you examples. Let's put 30,000. Whoops. Trying to do my keyboard and stay close to the microphone. Okay. There's 30,000, right? Now I can sort, I can do anything I want. And then what I'll do is I'll add NAV, because what I did is I kept the NAV over here. So I can go out and sort, right, from largest to smallest. So who's got the best? So right now, NVIDIA, and the reason I can do this is because all these funds launched at $20. So the math is pretty straightforward. I just look at the current price and say, where's the NAV relative to it opening at 20? Yeah, I know. Somebody's going to tell me, no, it opened at 1990. The target IPO price for the fund is always $20. Can it move around a little? Yeah, I bought GDXY and I had like 1995, and all of a sudden it opened and I got filled in 1990, and I'm like, okay, they didn't have a huge demand for the fund, so I got filled at 1990. So you look at this and you say, well, there's some funds out there that are ugly, right? But you have to take it relative. Ulti hasn't had a lot of paydays. It's down 31.45%, but it's paid some decent money. It's averaging, if I can get it right, $1.25 over March, April, May, Ulti. March, April, May, and June. Is that right? I was thinking, yeah. So it's paid $3.76. So it would still be underwater in that case, though, right? Because if you bought it at $20 at the open, or close to it, then you've been paid close to 4, so that's going to put you around 16. So yeah, your total return, you're down. No question. But I would say Ulti is one of those, wild child is what I call it on my channel. They're still getting the model dialed in. But if you go out, I bought my first foray, I bought a little at 16. I don't own a lot of it. So I'm ahead of the game because I think I've gotten 2 payments on Ulti at 16, but maybe not. But, yeah, I think so. I'm probably break even or slightly ahead because I think I got $1.27 and then the $1.13 come tomorrow. Yeah, from my $16, I'm a few pennies up, but it's nothing it's not a big investment. To me, that's a wild child. They may get it dialed in. So anyway, I don't want to go on and on with this. But there are so many caveats and so many factors. Don't listen to the detractors. Don't listen to the guys that they're haters. They think, well, if it's too good to be true, then it's too good to be true. No, you have to consider what's going on. These weren't things that were available. And they're different from pure covered calls. Ulti actually behaved like a pure covered call. But at least they choose high yield stocks, but super high yield stocks, high IV stocks, implied volatility. So that in itself, they get losers and they get winners, and the covered call approach, I can do that myself all day long by buying the underlying, although that would be hard to do on Cony and Mr. to get enough shares that in a fund because they're so high priced. I bought Cony before, right? I'll buy a couple of hundred shares and it's a fair amount of money and I can only write 2 calls, but I've done that. I sold puts against it to collect commission, and then in one instance I got 1 contract put to me and I wrote 5 successive weekly calls, kind of like a wheel strategy, and got called out, and I made what I just about would have made in Cony, had that, but I was still in Cony also. I tried a tactic where I was going to do a 2-day put and I didn't think it was going to go lower and I was going to keep the premium, and they put it to me, but I was happy to own it at that price. So guys, that's kind of what I wanted to show here, that I built this to be able to show it. I can sort it on any of these. So again, this field, why it's slightly different, right? So if I put 30,000 in Cony, now Cony's going to vary because Cony has been around. It will have a year in August. So this is showing me if I put 30,000 in, I'm going to get 1,372 shares. And if it pays its 3-month average over the last 3 months, then I'm going to get $3,098. Okay. If it pays me the average since the fund inception, which its first payment was October of last year, and the inception was late August or early September. Okay, and if it pays me the last dividend, which was one of the lower dividends, not the lowest, it's been $1.07 before, but this one was $1.69, then I'm going to get $2,331 every month if it pays the same, right? So these are how I split this up, because in my mind there's no perfect number. All this does is hedge your bets. So I'd say, well, it's a pretty good idea that you're going to get somewhere between $2,300 and $3,100 for a payment across 12 months. Now, is that an absolute? No, absolutely not. But it's a better way than just taking the last payment. And so these are going to vary based on the history, right? Look at Tesla. Let's go look at that. Forget about the NAV reduction. So I invest $30,000, right? I get this. It says my 3-month average, I'm going to get $1,300 back. But if I get the average over the entire period, when it was higher priced and it was doing better, then I could get $2,500. And if I just take the last dividend, it's $1,200. So the longer these things are there, and again, that's someone who's gone through an NAV reduction, but you got the haters out there telling you, YIELDMAX, they're just returning your capital, right? It's a Ponzi scheme. It's terrible. Just go buy the stock. Guys, it's not true at all. I mean, cony. Let's take cony, the last one. So cony has made its 10th payment. And you see the variance of the numbers. But I can tell you firsthand that they have returned in their 10 months, I think. I have to verify. I think it's 10 months. But again, I closed out these earlier. I closed them so I could, without having to scroll this. So I believe it is paid $16.95. Now I may have it in one of these other tables. Yeah, I do. Okay, let me go get cony. So cony has returned a total of $16.95. So it's got an average payment of $1.88. And median is 1698. Its stock current price is the same as the current price, and its yield percent is 93%. So what we're looking at, I just want to give you a perfect example. So cony in 2 more payments should hit $20. That would require a payment of $1.5225, right? $152.50 would give it 305, and 305 added to this 1695 says when it reaches its 1 year of payments, it will have returned $20. Well, what did you buy it at? If you bought it in the first month it came out, you bought it at $20. So all this stuff about they're returning your capital, yeah, they're returning $20 to you. I'd say there's a 98% probability that 2 more payments will get this to $20. And then the argument might be, yeah, but what's your NAV reduction? Well, guys, we're 2 months away from those payments, and it's $21.86. So call it a 10% gain. So I got a 10% gain in my underlying. Okay, you could argue it's 9.5, 9.5, 9.6. I don't have to do the math. I can be close enough in my head. But I got 100% return. Okay, maybe it doesn't quite get to 20. It gets to 1950. So I've got like a 98% return. That's not bad. 98% return of the money handed me. What if the money that was handed me, I had it in another fund and I wasn't dripping and I was getting paid from that? Then I could add that in. So that's a nice total return. So those people that tell you all you're going to get is NAV reduction, they're returning your money. Again, they're half-truths. I'll be polite, not say liars. It's a half-truth. All right, guys. That's what I got for you. These funds are for real. Yeah, they're as dangerous as buying any single stock. If you buy the wrong stock, the stock can go down. Same thing holds for YIELDMAX, but they pay you a lot of yield. Okay, what's the worst yield here? Let's go to this one. I know I said I'm going. Yield. Let's rank it, largest to smallest, right? So, Apple, JPM. I don't know why Microsoft's, but I get they've come up. They're doing a lot better, right? YIELDMAX, 42.75. That's the 3-month. So not bad to be spread. Now, is it a perfect spread? I mean, there's a lot of tech in there. There's pharmaceutical. There's some BTC. I mean, they own all the 20 underlying. There's companies like PayPal, right? Financial services. Tesla, an auto manufacturer, although they're more than that. Netflix, right? Entertainment. You know, and then you got tech. Murni, pharmaceuticals, Squee, another payment type system, AI on the tech sector. You know, Ulti is just a mishmash of a bunch of companies. NVIDIA, tech, right? AI chips. Google, you know, tech. But you are spread in some of the ExxonMobil, energy. So guys, these are good funds. They're not perfect, but you show me a higher yield. You don't see it. Everybody will tell you, oh, you know, FEPI or IWMY. And I go out and I look at IWMY. Yeah, it's got a nice yield. It's also, I look at the stock, it was 26 months ago and it's 14. I mean, I can do that in Ulti, right? I mean, but they don't have these other winners. Okay, that's what I got for you. I'm going to let you go. Have a great one. Hopefully this was helpful. Let me know. I got a lot of new subscribers, so I wanted to remake this so I can help you with how much you want to invest, and then we can spread it, right? You can say, okay, I'm going to put 10, use 10, and I'm going to pick 8 funds with 10 grand each. And then we add up what the monthlies are for each one of them, and you get your total. Okay, guys. Bruce out. Again, this is not financial advice. I'm not a financial advisor. Hopefully you had fun and you were entertained. Okay, bye.